Hello everyone, Jesse Webb, TradersPro. Have a few things I want to go through this morning. We'll come back to this. Let's start out with direction alerts. We've moved back to mildly bearish in a bear market, but we're seeing that bear market level starting to climb, which is this number here, this negative 3.84 is essentially this line right here and this number on the chart right here. So we're continually, even though we've had this pullback, a little bit sideways movement, this is continually working itself higher. It is a slower moving indicator, so some of this, it may kind of pause or kind of flatten out here a little bit with this volatility, but nonetheless, we're still working in that direction. So, and we've come off some of the extremes on the low side, and some of that move back into mildly bearish is just a step higher. The next step higher is going to be mildly bullish in a bear market. Excuse me. And then the way that it works from there is it'll go bullish in a bear market, and eventually eventually if we continue and cross this line up here, that's going to go back to a bull market. So right now we're just in the midst of this chopping sideways. It really is the climbing the wall of worry, so to speak, as we're continuing to see some decent buying here now that we haven't seen any additional bank issues pop up here. So we'll see how things continue to move going forward. Momentum is working itself back up into this range, and breadth as well. So we're moving back the other direction. We're moving back to the up direction after being in these oversold conditions. So that's going to add, again, just a little more bullish tone to the current trend, and that's productive. The other thing that we want to keep an eye on here is the buy-sell ratio. We're at this upper range. It just typically doesn't go any higher than this. I've mentioned in the past that this isn't necessarily discussing momentum. It's just pulling data in for the number of stocks that are in downtrends, not how far down they are in the downtrends. So it caps out at a certain level. At some point, there's no more stocks in the database that can be bearish. So that's why when we see this upper range, it's just an unsustainable location, and we tend to get a bounce from there. So we may be in that bounce mode currently. We'll see how it unfolds. We're definitely seeing technology. Excuse me. We're definitely seeing technology and risk on assets starting to lead the charge here. One of the things I wanted to go through on the sentiment location on this sentiment chart is it's very good at locating these extreme locations and be looking for either a profit taking location or a new entry or a stop loss adjustment. Whatever the situation is in terms of using this data, there's a couple of interesting things. Number one, when we're looking at the equity market, this is the S&P 500. And then we can also look at the volatility index here, and you can see volatility is up in this extreme range. And typically when it gets up in this extreme range, you're selling volatility, which means equities typically will rally, and this will start to come back down again. When this is in the lower range here, and you're buying volatility, this means volatility is low. This means volatility is high. Okay, so typically when volatility is high with this indice, it means that stocks have been falling. Or there's fear in the market. This means there's no fear. There's a lot of complacency, which means the lack of fear forecasts fear, and current fear forecasts the lack of fear or complacency. They just work back and forth and back and forth. So we're in this location where we've had quite a bit of fear in the market, and if we continue to see good news, and I think we've got some CPI numbers, we've got some Fed numbers, that the market may be paying attention to here over this next week, that may allow a little bit of this fear to subside. If you take a look at gold, some of the things that have been working really well, gold is really overbought right now. Not that it's going to reverse, but it could be due for a little bit of a pause. Crude oil, the opposite. Crude oil is deeply oversold right here and could be getting ready for a bounce. So this is a quick indicator just to glance to look to see for a contrarian reversal type trade. When we get into these extreme levels, then again, they're just not sustainable and they can bounce from here. One other thing I mentioned the last couple of days is taking a look at, on the index scans, taking a look at the number of Dow stocks that are in that buy zone. It's gone in the last few weeks, gone from 1 back to yesterday was 7, back to 8 today. What's interesting, as I mentioned yesterday, are the stocks that are leading. You have McDonald's, which is essentially a a consumer staple anymore. Nobody's going to not eat McDonald's during a recession. Apple Computer, so a tech stock. Procter and Gamble, Coca-Cola, General Electric, some consumer staples. Microsoft, Cisco, Intel, and then some tech stocks on top of that. It's an interesting setup. Whereas the opposite side of that, you have on the industrials, the 14 that are in downtrends. You've got oil, Chevron and Exxon. You've got Caterpillar, Home Depot, and then you've got all the banks, Travelers, JP Morgan, Goldman Sachs, Walt Disney, 3M, Verizon. Kind of an interesting mix. Not necessarily that it's saying anything, but these are the stocks that are deeply out of favor right now, which is interesting. You look at Disney, you look at some of these others that you might anticipate, maybe not as consumer friendly in terms of being able to spend excess money if we do go into a recession. American Express, obviously the banks are going to all be down, but some of these other ones as well. So it's a great place to be able to look to see kind of what themes are happening in the market as well. It's just a quick glance. Doesn't obviously tell you everything, but it gives you some good information on what may be working in the market, and these particular trends are currently working. If you take a look at the Muscle Stocks group for today, we've got Computer, Sigma Lithium, Corp. We've got H&RG, which is a coal company, I believe. Yes, coal. So a little pop off here and some basic materials. IC, which is a medical stock, potential breakout on that, potential breakout of these upper ranges. As you have this strong rally and a counter trend, be watching for some additional confirmation on that chart. And we also have EVOP. This is kind of a messy looking chart. Sometimes when I see a lot of volatility like that, I'll just kind of move along or maybe do a little bit more homework. Monster Beverage, which is an interesting stock that used to be a super high flyer back in the day, and looking like it wants to break out as well. So we're seeing a little bit different mix in the group there today. Some technology, some consumer staples there as well. If you don't have full access to the site, you can sign up with the link below, and we look forward to having you. Have a great day today.